Hello and welcome back to this edition of Daily Actives brought to you by Bootleg Macro. I'm Dustin. We are looking at Tesla once again, and I love what I see, and I'll show you exactly why. So the recent price action for Tesla has been extreme. People have been talking about it. We are on the march to 1 trillion again for the market cap. But what I noticed in the past 2 days, when you see this red lettering with a white background, it means that you were 3 standard deviations above the mean. And now I can see that today with that red background with black lettering, it means that we are back 2 standard deviations above the mean of the 23-day average. Why I find that to be really useful is because when you see breakouts in Tesla, you see how this was red lettering with a black background, and then or reverse that, and then you see that it gets back green. When it's in the green, that's in its standard distribution range. When it's in the standard distribution range, that's when you actually can get an opportunity for it to break out. It is really hard for it to keep going 3 standard deviations above the mean. It is Tesla, so I will give it the benefit of the doubt for a lot of this. But now getting back, I can feel much more comfortable with the idea that we could actually be seeing a nice move higher. And one of the things I'm going to point out too is that the volume has not gotten extreme. When we see the price kind of not going anywhere when it's in the regular distribution here, we see the volume kind of dries up. It's under 100 million, which is really rare for Tesla at this point. And what we're noticing as well is that the way that the volatility is moving, you see how this here says volatility is falling? Well, you notice next to it, this is actually the volatility. So it is falling, and it's showing you that it's falling, as well as then you see on the future price path, it says that the price is to rise. And the reason why is because the volatility was falling while the correlation to price was also falling. And what that means is that you're generally going to get what you've seen here, which is very small bars in terms of the expansion of how large the actual candles are. And I'm going to go here to show it. When you get a falling volatility with a correlation, which is falling, what you're going to see is you're getting essentially like an anti-move, which means it's going up only because the derivative is going up, not because the market is making it go up. It's not because the participants in the individual stock are making it do it. It's more of a natural phenomenon. It's the difference between like acceleration and like speed. Like it equates to something that is much more important than even the price point itself. And that's why when I look at the type of action I'm seeing in Tesla, I'm very convinced that right now is a great opportunity for it to go to $1 trillion market cap. And just because the market loves things that it knows are going to happen. It could be like Dogecoin where it hits it and then it just collapses. You know what I mean? Like when Elon was on SNL and talked about Dogecoin, that was the peak. So this could be the peak again. Who knows? But I do see on the signal, it is a go long in the short term, go long in the intermediate term, and go long in the longer term, which are very positive. We really haven't seen any go short signals since, I don't know what period of time this was. Yeah, April, which again, you see that the price was doing terrible. When we look, we are bullish on the short term, intermediate term, and longer term. We've been bullish ever since. I consider 2 of them to be bullish. We've been bullish ever since May 23rd, which has been incredibly nice. We're going to go ahead and look at the overall rolling sentiment as well. The rolling sentiment for Tesla is flipping to rising bull again, and it's actually closer to 50% than it is up closer to 60% at this point, or where the high was at 70%. It's at 54. On the ultra fast, which is really good to see. So I know they can set up again. We can look at the chart and tell that very quickly that Tesla is doing exactly what I was mentioning earlier. It's respecting the volatility and the price correlation. The daily sentiment is very good right now. It's probably closer to 53%. So we're closer to 50%. The volume is really dried up, but that's completely fine. This is the first time that we've seen the volume actually get above the 15-day moving average since back in June when it was having those highs, which is very positive to see. We can see the volatility, just like I was mentioning, has been falling for a while the correlation is going. It looks like it could plateau, maybe rise again, and then the correlation would rise and you get some really big moves higher. I think that'd be really positive for Tesla. I mean, I don't even have a position in it. I'm just honestly giving the opinion based on my statistical analysis of the things I've built for myself. And that's why when I can see here, even at the top of the range, it looks very good. The range is starting to inflect up. Really positive to see. But tell me what you think in the comments below. Are you long? Are you short? Do you like it? Do you love it? Is this even a good review? And before you go, subscribe to the New High newsletter. It comes out Sunday with 25 stocks breaking out at 9 a.m. I'll talk to you soon.